Welcome to Office Hours at TradersPost for October 14th, 2025. I'm one of your hosts, Tom Hartman, Marketing Manager here at TradersPost, alongside Mike Christensen, co-founder and CSO. We're always working to make TradersPost better day in and day out. Each week, we take a deep dive into all things TradersPost, answering your questions, gathering your feedback, and helping you get the most out of the most advanced trade execution engine available to man. To that end, we encourage you to submit your questions in the chat, and we'll get to them by the end of the stream. Did you guys hear how I was actually about to switch that intro up a little bit, and then I corrected myself. I was like, "Hey, let's not be offensive on stream here. Let's be nice and decent, guys." A little bit of housekeeping here, or a little bit of a victory lap here on Price Action Live, which we do Tuesdays to Fridays, 9:30 a.m. Eastern Standard Time, where Mike and I, and sometimes a third guest comes in, and we trade in front of you guys. Right now we're doing prop firms. Has been picking up a little bit of steam, and what I've been liking is what people have been asking in the chat. And today's question on PAL was, how do you guys trade? And like, how do you guys
What is
choose?
this? Yeah, what is this style of trading was the question.
That's right. Well, I think specifically, the guy said, "I want to trade like you." I mean, they were saying you, Mike, but I pushed myself in there, and I thought it was pretty interesting. So, just as a reminder to everyone, if you want to go to Peter, can show my screen here. You guys can go to the Traders Post YouTube channel, which you're on right now, and you can. Like and subscribe and get notified when we go online, which is Tuesdays to Fridays, in order to trade live in front of everybody, which is great. So I think one of the reasons they're asking is that when they see Mike succeed in his trades, everyone wants to play ball.
Everyone wants to be like Mike.
Before I continue, I should preface this by saying, were you able to keep the gains from this morning?
No, gave them all back.
Gave them all back. It's just straight away. What's interesting though is the Mike and I have two different styles of trading. This is what I always like. We have different styles of trading, but sometimes we come to the same conclusions, or sometimes we're completely diametrically opposed, which is always very, very fascinating. And this is how like all traders are. You're in groups. You're trading, whether you're part of trading courses or prop firms or whatever it is, and you sort of like have it in your head that, hey, there are these. There has to be a right way of doing this. Like, can't we just all know what the right way of doing it, and then we just all do the same thing, and then in order to make money? And you sort of realize no, because the crucial component in that whole thing is your temperament, and the things that you appreciate in charts. So, for example, Mike is perfectly happy to sometimes scalp trades, so switch between trend following and scalping trades. Whereas if I scalp a trade, that's basically me losing. There's no way I can emotionally handle scalping a trade, because either the trend will continue and I'll feel like I missed out, or I'll just so oversize that a wiggle within that candle and I'll get stopped out. Like I can never find the right way of going about it. Whereas for trend following, I can do trend following all day long. What is interesting though is that we're not using crazy indicators, pro suite indicators, all kinds of different things, which I'm not saying are bad in any way, but I'm saying we're using run-of-the-mill indicators on charts. And I thought it might be interesting today to go over a couple of the indicators that we do use, and a couple of our trading styles, to explain how we take a look at charts. And I'm going to take the advantage here, Mike, as when you're when you're pointing out the way that you're looking for trade setups, I would love, or when I'm doing it, I would love for you to interject, and I'm interject when doing yours, because I want to be like the audience. I want to hear, okay, but why are you doing it this way? And if you had to choose a second way, like how would you go about doing that? So let's just take a couple of minutes here, and we'll go over our trading styles. But we will be getting to the host of questions that we had over the last week. So if you guys have any questions about how to use TradersPost, or even just trading in general, please feel free to place them in the chat. First off, Mike, how do you feel if I started off here?
Yeah, go for it.
All right. So there's there's three main indicators that I use for trading. Now, I made all my own indicators except the RSI. However, they're all very much based on the same sort of things you can get from the library, because these are concepts that are popularized. First off, that is volume weighted moving averages. So I like volume weighted moving averages, and I use an envelope of them on the charts for a number of different reasons. If you're going to be using a oftentimes people will use a simple moving average or a exponential moving average, SMA or EMA. And the issues that I have with that is that the EMA is very responsive in the short term. So literally on the candle you're on right now, as the candle is moving drastically, that EMA, the front of that EMA can be moving drastically too. So I find it very temperamental, and it's great if you have some sort of automated signal or whatever, and you want it to respond quickly to a potential crossover of two EMAs or something like that. EMAs can be really good for immediate responses, but SMAs are, you get the trend, like it's staying stable, and you only get the cross, maybe the big green candle that shows once that cross happens already started, but you're not getting in earlier than where the confirmation shows up, or it's easier to get a confirmation on that. I don't like either of those moving averages. I like volume weighted moving averages because volume is one of those indicators, one of those tools that's used to confirm a move. And so when I use volume weighted moving averages, sometimes they line up with the SMA, but sometimes they're off enough that I find that the candle responds to those levels. So in other words, when I use an SMA, often the price will oscillate around the SMA. But when I use a volume weighted moving averages, oftentimes they're almost perfect resistance and supports. And then finally, I use an envelope of them. I use multiple ones of them because they can work for, the price responds to these volume weighted moving averages in multiple different ways. You'll ask 10 people which two AMAs they'll have in the chart, and you might have all kinds of different ones: the 50 and the 200, the 8 and the 55. That's from your strategy, right? Right, Mike, the 855 strategy.
Yep.
And you'll have people who swear by any number of them. So volume weighted moving averages is one of my three. My two other ones, and I'll go faster through them because they're not as deep, is the RSI. So I love the RSI. I don't know if you were in the same boat, Mike, but I used to use the RSI. I used to not use the RSI because I thought too many people used it, and that I wasn't going to get an edge. That's what I initially thought, until I realized that's so stupid. It's because other people are using it that I should be doing it. I'm trying to figure out where orders are going to be, where sell orders or buy orders might be on a chart, where they might cluster, and people are not going to ignore the RSI. And so overbought conditions and oversold conditions on the RSI are super, super useful, especially when you deal with them across multiple different time frames. So over here, it's a little bit crazy here, but you guys will see on the chart. We saw this today on Price Action Live. We had an overbought. This is the NASDAQ we're seeing right now, and on 4 charts. Top left is 1 minute, then 5 minute, then 15, then the 2 hour. And we had an overbought condition that we came out of recently from the 2 hour. We had another overbought on the 15 minute. We had an earlier overbought on the 5 minute. This was right at 9:45, where, because it coincided with the other overbought conditions from the other one, the reversal here was a great timing. This overbought level was a perfect move in order to get in, or to start looking to get in for a long move. So I love RSI now. I use it even more than MACD. I use it more than any other indicator for momentum and overbought and oversold conditions. And my final one is volume weighted average price, VWAP. Mikey, so thankful that you showed me VWAP. I never used to trade it. I never even really thought about it at all. And then you pointed me in the direction of that Brian Shannon book, anchored VWAP,
Anchor VWAP.
and it completely changed everywhere that I thought. If I just remove some of these other ones from the chart, you'll see how I make my own anchored VWAP, and essentially I am. Let me just hide these for a second. I pay attention to VWAP. I don't actually care where VWAP is right now. Like these levels that you're seeing right now. Let me just hide the. Let me just show the weekly VWAP. Be easier to see. So this red line here is the weekly VWAP. And I actually don't necessarily care so much about the active one. I know a lot of people do. I don't really pay attention to those. I pay attention to what is the final price of the VWAP at the time that the anchored VWAP switches session. So this, we're looking at a weekly VWAP. So here on all these red bars, it's actually the session is switching, and whatever that price was when it switched, that to me is what's called an unmitigated VWAP level. And those levels often need to be cleared. And they act as either magnets for the price, and then after, when the price is there, either as resistance or support. And it turns out I use the VWAP from the 2 hour weekly time frame all the way down to the 15-minute time frame, and all of them seem to matter, and they give way more they give me way more reasons why the price moves the way that it does. So if I go to my 1 minute time frame right now on my chart, and I just remove some of these other guys so you can see, these white bars, those are my 15-minute VWAP levels. And you'll see here that the price does this thing where it moves from VWAP to VWAP. So all these white levels, the price is moving to them. And I just love how the price reacts to them. And I find it to be super useful for me to be, if I'm in a short-term intraday trade, I can be like, okay, we just touched one of these levels. I have enough profit. Let me take money off the table because I can't guarantee that the price moves through here. So those are the three things that I pay attention to. What about you, Mike?
All right. So should I share my screen here?
Sure. Do you have any do you see any holes in the way or any indicators where you're like, Tom, you should really consider this because you were so great with the VWAP one? Do you have another gem inside your pocket?
I think the only other gem for me is just keep paying attention to price first. Because for me, all the indicators are all derivatives of price anyway. So we want to pay attention to what the candles are doing and how they're printing. I tend to really even try to focus on what's happening intra candle. You know, how fast is price jumping from one price to another? Did we just have a 1 point jump and then all of a sudden a 6 point jump? Those are small flashes of indications that can help me understand what's happening behind the scenes without actually having to use something like Bookmap or, you know, an order book analyzer to get a sense of what's happening behind the scenes. So, you know, the most important thing is just to pay attention to the candles first in my mind. But let's start from the top. I do more top-down analysis, just like Tom. We look at all time frames. I like to look at the daily chart, the 2 hour chart, the 15-minute chart, and the 1 minute chart is where I get in and out of my positions. But I'm not in and out in 1 minute. Most of my trades, especially trend following trades, can be hours long. I'm looking to capture most of what trend shows up on the charts for the session. As a trend trader in live futures accounts, I might be in positions for weeks at a time, and I'm really just looking to measure the trend. So everything really kind of starts from the daily chart, and I'm looking for the most recent pivot points to get a sense of the regression trend. This is a tool that's built into TradingView. It's called Regression Trend. I personally like to understand the full set of the data, 99.7% of the data. If you're familiar with the empirical rule in statistical analysis, you're looking for 3 standard deviations of the data, which should capture 99.7% of the data. So I have three standard deviations on the upper side and 3 down on the downside. So this gives me a good wide range to look at, basically the trend channel that we're currently in, and where I think that price might break that trend in order to start to reverse into another direction. Another trend following strategy I use is something called the slope filter, which basically just measures the 25. Here, I'll actually pull up the source code on this one. It's looking at the current EMA relative to the previous EMA 25 bars ago, or sorry, 15 bars ago. And when that number becomes negative, we know we're in a bit of a downtrend. When it's positive, we know we've hit the other side of the uptrend. And it's a fairly reliable indicator for determining trend. Obviously, right now, this is currently in the uptrend channel. The value for the indicator is 955. So I start here. What's happening on the daily chart? Are we still on the rise? Are we still looking? Are the candles printing in a way that's uniform? You know, the price action from Friday is a fairly large candle, but looking at all the price action going back across multiple weeks here, you can see it's not a massive candle compared to like April 4th or April 9th, you know. So it's important to recognize what's happening on the daily trend and then start moving my way down to the 2-hour trend. One of my favorite indicators is the support and resistance channel indicator. This one was made by, it's an editor pick, and it was made by, sorry, who's the author? Lonesome the Blue. And this one basically automatically looks at areas of support and resistance and plots those on the chart in bands. And what I like about it is that in true technical analysis fashion, it doesn't try to put an exact price point on where support would be. It gives you a nice band to show you that price can move around in this range and still be considered support, which is definitely true. You know, prices never touch a support line exactly. Sometimes they move a little bit beyond it, or maybe a little farther beyond it before it starts to reverse again. But this helps me get in a sense of what I call S1 and R1, and then S2 and R2. And those alerts that I have on the chart also help me intraday. Once I'm in the session, if all of a sudden we start touching an R1 line, I know that there's a really good chance that the selling pressure might establish there, because data on the higher time frames has a lot more precedence than on the lower time frames.
Awesome.
So same with you though, Tom. If I'm on my actual trading chart, what matters to me most is where we're at with VWAP. I go long above VWAP. I try to go short below VWAP. And I'm looking at ATR. ATR is a really important indicator for me to determine whether we're too volatile or not volatile enough for me to get into a trade. Because usually if price action really starts to fall and ATR comes down, it's just choppy and noisy, and there's not a good trade there. We want price movement. In terms of overbought and oversold, I used to be a big fan of the RSI, but I've moved to something called the MACD, which was made by a fellow CMT in the space named Alex Spiriglu. And this indicator is basically a ratio of the MACD over ATR. So it's a volatility adjusted momentum indicator. And this helps me understand when effectively things are in overbought territory or oversold territory. Like this indicator here is showing that there's a big break of what would be normally a typical range for sell-offs. And this went well beyond that point last Friday. So that's how you knew we were in really sold territory.
A couple of questions here then, because I've always liked when you call out the gap. So
yeah,
you'll talk about
gaps.
Exactly. So you'll mention, hey, there's 20 ticks to the downside for this gap, and you expect a gap fill.
That's right.
It doesn't happen all the time, but can you give us a little information as to like how reliably you use that type of indicator?
Certainly. I'd say gaps fill about 80 to 90% of the time. I don't have the hard data in front of me right now for NQ, but it is a very common occurrence for gaps to fill. And if you've studied technical analysis for a long time, you know that it's a common saying in the space that gaps will eventually fill. And it has happened more often than not. It may not be the very same day, but it could be the next day or the day after, or maybe even the week after. Eventually that gap will fill. And what we mean by the gap is basically the close price from the previous session and the open price of the next session. If there is a price gap between those 2 points, then that is a gap. I use the built-in gaps indicator on TradingView. No special settings here. I'm pretty sure this is the default settings. And like today is a perfect example. From last Friday, there was a very big opening gap here of almost 1.1%. And that gap was actually filled completely today. So the indicator actually shows that it's been filled by closing this square. If it hasn't been filled, then it continues on the rest of the chart. In previous sessions, for example, This session here from Friday to Monday, we actually had a gap up, and that was eventually filled today before filling its own gap the same day. So most gaps do fill. It's a very, very reliable indicator as well.
And you often will mention something, you'll often say, there's a reversal here. And I've never actually pressed you to find out if you're talking about a candle pattern, or if you're talking about because there's a close above VWAP after we were in an oversold session. Like, what's a reversal to you?
Sure. So let me move the chart back here. Oh, shoot. This is all new, apparently. I'm having a hard time figuring out how to get my replay to go backwards. Why don't I just draw this out on the chart and show you what I mean by a reversal. This is where the linear or the regression trend indicator is actually really helpful. If you plot the regression trend from your starting candle or your pivot high to your pivot low, you're going to get a sense of the current trend of this move. And you can see here, based on the Pearson's R score, this is a very strong relationship between price and time. A Pearson's R of above 0.7 is usually a very good indication of a good, strong trend. And if you start to see a break of that trend, especially against the other side of the regression trend channel, that should be an indication that we found the other side of that trade. So what I tend to do is I start to measure the start of a new trend against the one that we're in. And this will form a diamond shape inside of that trend channel. And when it breaks on the other side, that's my indication of a potential reversal. And then I just start to measure in the opposite direction using the same tool, chasing the price. It looks a little different when you see price coming in one bar at a time. So let me see if I can get the replay to work here so you can see what this looks like. I'm going to go ahead and select a bar. Great. This is perfect. Okay, so let me make this a little bit larger, and you can see how we're going to use the regression trend to measure the current trend and where it might start to break. So far, the lowest low that we've seen is at 470 here, 24,470. So we'll move forward a couple of bars. There's a new low that gets printed right here. So I just keep moving the regression trend down. This is telling me the trend is continuing. But then as we push forward a couple of bars here, we can see, wow, that's a pretty big reversal candle there. It's engulfing the last two candles. And it's starting to show signs of it being a new high. More importantly, it's bumping up against the other side of this regression trend. You can see it's almost breaking outside of it. So what I tend to do at this point is to start to measure what could be a new trend in the opposite direction. And as the candles move forward and they break outside of the previous regression trend, this is where I would mark a reversal. And this is a good spot for a potential entry. In this case, I definitely wouldn't have taken this trade because we are below VWAP, and I would want to see how price comes back and tests VWAP. This can lead to what I call a revision, where if price was to continue from here and move up to VWAP here in the future, and then effectively get rejected, what I would do at that point is move my regression trend to cover all of those candles as well, and check the Pearson's R to see if it's still a solid trend. And then that's a really good opportunity to trade the rejection of VWAP.
Okay, so this particular trade, I love that you brought this up, and I'll just show you my analysis of that before we close up the section, because I think it shows how different people can be looking at the same chart in very different ways.
Certainly.
So over here, the drop that I saw is that Peter, if you want to pull up my chart here. So I have here we had this open at 9:30 and we fell, and we cross this 15-minute unmitigated VWAP level, which becomes mitigated. The price falls below, rises back up in order to test that line again, and then falls. Now, it's falling, but it's falling while we're in oversold territory. So I should be looking for a bounce. And something that I always like talking about is that the 15-minute candle, which is what these white bars are demonstrating, 15-minute candle, for me, when you're talking about price action, to me, it's what happens in that 15-minute. How does that 15-minute? What's the fingerprint of that candle?
Mm-hmm.
And oftentimes we'll fall into the close of the 15-minute only to rise afterwards, after the 15 minutes done. We see this again over here, fall into the 15-minute end and then rise out of it when we're in overbought territory. So I look at this over here, and so once this rises, the first minute of the 15-minute candle I ignore, because it could just be all wonky. You can do all kinds of different things. But I do know that we have an unmitigated 15-minute VWAP level that prints over here when this candle starts. So then I go, well, the price is going to be dragged up to that level. If we are in the strong downtrend, I'm going to expect the price to roll over. But then we got this doji right at the white 15-minute VWAP, and then a strong candle. So to me, as soon as this happens, I'm looking to get in long. And then as soon as it breaks above here, now I'm ready to definitely be long. And then it was long for the rest. So it's but I'm more like, I want to catch a falling knife. I mean, I would get in here if I could. Whereas you like the confirmation of the trend, but there's more than enough meat there for you to make some money afterwards, which you did.
Confirmation has always been the big key. In fact, when I was going through the CMT program for technical analysis, there was an entire chapter dedicated to it, and it was a big eye opener for me, because in the past I was getting into trades fairly early and not waiting for confirmation of the trend. Either that was an engulfing candle, or it's crossing over some sort of EMA, or it's crossing over something like VWAP. We want a full candle close, and I want to see how it prints before I'm ready to get involved, because that saves me from getting in too early. For you, I understand your approach is a little bit different, and I think that that's maybe another highlight of all of this, covering our indicators and so on and so forth, is that you have to find the approach that works for you. And once you've found the indicators, they're really just more of a guide to you following price action. Wherever price is heading, you want to make sure that you're comfortable getting involved and you're heading in the correct direction, and following along as the trend progresses. And it doesn't matter if you're mean reversion or trend following. What you're trying to do is get in at one price and get out at another price in profit. And so your whole job is to make sure you're getting in at the right time.
That's right.
And not too early to where you get stopped out too early, especially if you're sizing really, really large. It's hard for me to catch falling knives because I try to size pretty well, sometimes 1 to 2 minis. And if that turns against me real fast, I'm losing hundreds of dollars every second.
That's right.
Yeah.
Our quick hi from Joe Fee from the chat. Thank you so much for being here. I hope you guys enjoyed that. If you want more of that, please come to Price Action Live Tuesdays to Fridays, because if you ask those questions in the chat, we'll certainly be answering them if we're not in a trade, or if we haven't lost too much that day and we feel too crestfallen. But usually one of us is pretty happy.
Yeah, if it's been a bad day, I'm going to throw my computer out the window. So it's I'm not going to be on for very long, is the point.
Yeah, and just a reminder to everyone, you could always go to the TradersPost Discord group, where there's tons of people there. There's hundreds and hundreds of people there constantly talking, helping with ideas. They're great to bounce ideas off of, whether it's script ideas or strategy ideas. It's a group of people who love trading. All right, before we continue, we're going to get to everyone's questions. We'll take a quick word from our sponsor.
Looking for a prop firm that actually plays nice with automation? Meet Blue Sky, built for serious traders. And with TradersPost, it just clicks. You connect Blue Sky inside TradersPost, route your TradingView signals to paper or funded accounts, and let it auto-manage entries, stops, and targets. You control risk per trade, filter by session and symbol, and pause or resume with a single switch. Every fill is easy to review in one dashboard. Funded accounts can request payouts daily with launch plans starting at $49. Get funded with Blue Sky. Execute with TradersPost. Apply today at bluesky.pro, BLUSKY.pro, and plug in your edge. Trading involves risk. Use proper risk management.
Welcome back. All right, as we do every week, we love to go through the questions and testimonials or feedback that we get from you in the community. If you're using TradersPost, the platform, we're always trying to make it better. You're always seeing add-ons and things getting upgraded. But for that, we need your help. So our first question actually is a bit of a long one. Comes in from Reshma, who asks, I have a question about the rate limit. Can you please clarify how this works? I'm not a high-frequency trader. I'm a position investor and trade only on daily and higher timeframes. I have a watch list, and my strategy sends alerts, webhooks, orders when there's a trend change or price pullback to the support levels on daily and higher timeframes. I get several alerts at once at the same minute because the daily trend changes. The daily trend change is confirmed after market close. I get alert orders on tickers in my watch list at say 4:01 p.m. Similarly, when weekly trend changes happen, this all happens all at once. Um, so by no means am I a high frequency trader, and I strictly trade on daily and higher time frames. I don't know how to overcome your limit issue because it says only 60 allowable requests on 1 minute intervals and 500 on 100 1 hour intervals. Does this mean if say I'm getting all daily trend changes alerts on say 100 tickers after market closes at 4:01 p.m., it violates your rate limit and won't accept my orders? I don't see the point of auto trading if this is the case. So this is a you can, some people now, because of the watch list alerts on TradingView, where you can have hundreds of tickers in there, and you can set an alert on the watch list, they might all at the same time be sending dozens to hundreds of signals to us. How do we handle that?
Yeah, I think this is something John and I are discussing at the moment, because we've had a handful of people who've been doing more watch list based trading, and we get it that there's a number of tickers that you're going to have to run through in order for that to work. It's not really getting in and out of positions quickly, but rather entering lots of positions or changing positions rather quickly across a number of names. So we're continuing to investigate and try to align our rate limits more closely with brokers as well. For the most part, our rate limits are in line with brokers, so it's important to recognize that this works pretty closely with the way that brokers are already set. One way we can help is by potentially bucketing more of the trades into 5-minute intervals instead of 1 minute, and that might help a small amount. Then you can get to, effectively 100 trades all at once, and then still have some more left over within that last 5-minute bucket. So we'll give it some thought. We'll see if we can explore some solutions there.
That's right. Next question comes from Jeff P. If I make a strategy, can I use it across multiple different symbols by cloning it and making it specifically for that symbol, or will the signal fire on both subscriptions? So yes, you can have multiple. You can have the same strategy with the same webhook, send signals to multiple different subscriptions, and you don't actually have to restrict or focus on the ticker that's there, unless, and this is what happened with the user afterwards when we were talking to them. If you're trying to send multiple different signals for the same ticker, so you have one strategy that's dealing with Tesla and then another strategy that's also dealing with Tesla, two separate ones, well, then you're going to want subscriptions to do two different accounts. You don't want to cross those. So that was like the heart of what the user wanted to ask. What happens basically when these signals get crossed, when these subscriptions get crossed?
Right.
All right. Next up, we have a question from Henry T, who says, how should I format ticker symbols in the alert message for JSON? For example, should gold futures be GC, GC exclamation point, or /GC?
Good question. It should be none of those. It would actually be preferably the full formatted contract name. So in the case of gold, that would be GC. What are we on? Z right now, I believe, is the current popular contract. So GCZ 2025 would be the correct current contract. You can do GC1 exclamation mark, excuse me. But that's going to rely on TradersPost to decide what the front month contract is, and it may not be in line with what you're expecting. So it's best to hard code your symbols for now. I would recommend checking to see what the front month contract is on TradingView, and then hard coding that symbol into your JSON messages.
Also in the back end, if you want to show my screen here, Peter, in the back end, if you go to the given strategy and then you click on submit signal, you can type in here what the actual symbol would be for that broker connected to that strategy or subscription, and you could put in that exact ticker. All right. Next up is a question from Wasilis B, who asks, hi, I want to offer my signals to copy traders. Is this possible? I saw a video about sharing strategies. Looking forward to your reply.
It's something that we are slowly starting to evolve from and into. What we internally, what we're saying is we support the independent trader. And what that means is, with the regulators that we work with and the partners that we work with, they're interested in ensuring that each trader has their own setup. They have their own charts, their own indicators, their own strategies, their own approach, if you will, to the markets. So that means that you can offer your signals in essence through the strategy or indicator that you use. You can still have a community. You can build that out. And we're working on features that allow you to share your TradersPost settings as well very easily. So you can copy it into another TradersPost account. But that user still needs to set up the indicator on their own charts and set up their own indicators and send their own signals from TradingView. They need to be in full control end to end.
Also, people, whenever we used to see something like this in the past where people were tied to a particular signal, often the questions would come in, how do I modify it for this? How do I modify it for that? I want to have more control over this. People want control over the signal source. So it's something to keep in mind if that's the sort of community you want to create.
Yeah.
All right. Next up, 2 questions from Cyrano E. First one says, how many strategies can I run with a starter plan on the same live account?
In theory, as many as you like,
right?
But you may run into conflicts if you're trading the same symbols across those strategies. There's no limit at the strategy level. There's just rate limits to how many trades you can send in at any given point in time within a single minute. But it's unlimited tickers, unlimited trades within those constraints of the rate limits.
That's right. I thought that was pretty interesting. Like I think it's the first time I had ever heard someone asking how many strategies can I run on the same account. But our limits here are based on your live account, your paper account, asset classes, and the rate limiting for the number of signals that come through, which is just a general rate limit. Their next question, also from Cyrano, says, does TradersPost now automatically tell from the TradingView alert on which exchange it has to look? Because there are American and European stocks with the same ticker. So go ahead.
Yeah, that is that is usually resolved by the broker. There should be a clear match between the symbol traded from TradingView and the symbol that is executed with the broker. I don't think I've ever seen a scenario in which TradingView believes it's on one exchange and then it ends up getting executed on a different exchange with the broker, because ultimately it's the broker that's the source of truth. That's where your trade's going to get executed. So if TradingView is behind and they think it's on Amex and that particular symbol got moved over to NYSE, it's going to get executed on NYSE. It's not going to matter that the price or that the symbol said it was on Amex on TradingView. Do we have an example of this? Did they run into that scenario?
No, they just asking in general. It actually ended up later on that just to let them know, we don't support European stocks at the moment. We only deal with American ones to begin with.
Oh, okay. Sorry, I'm misunderstanding. He didn't mention Amex. He's talking about the European stocks. Gotcha.
Right.
It's all U.S. stocks at the moment.
Correct. This is also one of the reasons why the asset class is chosen as well, because you can have the same symbol in one asset class as in another. And so this is why you're locked into choosing that at the beginning.
Yep.
And finally, last question from Alex C., who writes in and asks, if I had a trade open manually, would the position be closed by the webhook?
Yep.
If I sent in an exit signal. Yeah, absolutely.
It certainly would. We don't, it doesn't really matter where you send your signals from or if you open a position manually with the broker. That's because TradersPost automatically manages your positions with the broker. So at the time you send a webhook to exit a position, we're going to go look up and ask, how many shares of Microsoft does this account have? If it comes back with 127 shares, that's what we're going to sell. And 5 of those shares might have been a trade that you opened manually. We're still going to close the whole thing.
I remember before I was like, I would make the argument, hey, why doesn't it just like silo the trades, like the trades that happen on TradersPost is one thing, the trades I do manually. And then now that I'm trading more intraday, I'd be like, that would be a nightmare to be like, where did I open this trade? Where do I need to close this trade? Oh my God, it'd be crazy. We'd have to keep track of every single one of the trades, get them open and make sure when you pair at certain points, the error messages would be crazy. No, this as a bridge to your broker endpoint makes a lot more sense. You wouldn't actually want it to work the other way.
I agree. It'd be very difficult for us to track. It'd be very difficult for us to control the difference between what you're doing manually and what we're trying to do automatically. Eventually, there would be share imbalances somewhere or contract imbalances somewhere, and you would end up long when you don't mean to be or short when you don't mean to be.
That's right. All right, that's it for the questions for this week. We'll be back next Tuesday for more office hours at 3 p.m. Eastern Standard Time. Please, guys, come to Price Action Live every morning, Tuesdays to Fridays, because friends don't let friends trade alone. Plus, we need to know what trades you're in so that we can decide if our trades make sense or not, if you're close to position or not.
It's true. We need this wisdom of the crowds, if you will.
Yeah. Well, that last thing, in addition to the indicators on my chart, it has been absolutely invaluable to run my ideas by Mike, because he helps filter out without even knowing. I mean, the stupid ideas that I have in my head. I think to myself, if I can't say this to Mike, I probably shouldn't put the trade on. And two, if Mike has a completely different view as to where markets can go, I better ask him. I better know why he sees something completely different, because he's right way more often than I am. And so it's been very useful to have Mike, who's my mini community of traders.
Tom's being very humble right now. He has reminded me more often than not about how I'm missing on EVWAP or the weekly VWAP or some unmitigated level that I'm completely ignoring. And my favorite thing to do is when I see price bounce off of a particular level, I'm sitting here wondering what is causing this bounce. Tom usually knows the reason why it's off that level.
Perfect. All right, guys. So that'll be it. And join us next week. And until then, we wish you happy trading.
Cheers, everybody.